Hello, my name is Igor Tomych, and I'm CEO and founder of Dash Devs, and with me, my co-host Dumitru.
Hello, I'm Dumitru, Condrea, CEO and founder of NovaFin.
And today we are bringing you 3 news about what is happening in financial industry and fintechs. Subscribe to our channels, please listen us till the end and comment if you see something interesting. So the first news is about the Klarna, and we've been discussing it a lot last year, and I think that's a pretty interesting case when we see the recent changes in the class action that is finishing, which is affecting the pricing of Klarna. So a lot of expectations in terms of going IPO last year converted into the certain legal obstacles for the Klarna, which is affecting the current price.
Well, Klarna was the company who could be an example for a lot of European companies who wanted to enter on the American market. Unfortunately, happened what we see currently, and the lawsuit is a little bit suspicious based on my opinion. But again, I'm not in the position to take decisions or to make arbitrage here. I think Klarna just need to focus on where's the root of this. Klarna has to invest a lot of efforts, because if they will be able to pass this and will be able to demonstrate to American market and not only European market that they are able to fight with such kind of a by sure their prices will increase and they will basically return all the expenses and all the losses they had. It can be a truly example how European companies can fight on American soil with American regulations and to win into these situations. Who knows, maybe even this case is a little bit political.
Yeah, but the pricing, it's good to mention that actually we saw 4.5% decline in 7 days. And if we take a look at the decline for the last 30 years, the pricing went down for 8.9%, which is a big number. And I think it's good to cover. We see a lot of from last year Klarna efforts to put AI, and maybe it doesn't pay off because having the technology doesn't mean that you solve the business case, and that one might be of the reason why people doubt into the financial future for the Klarna. And it's going to be definitely the interesting ride this year for the companies like that, who are putting a lot of efforts and trendy stuff like stable coins, blockchains, and AI. And we will see how it will pay off from the financial side.
Speaking about the stable coins, several weeks ago, we talked into one of our weekly harvest about the fact that biggest European banks, at that moment, I think it was 8 banks, now currently are 10, who decided that they want to create a euro-based stablecoin. And that moment was just a memorandum. Currently, the company was established. So we see real actions. The name of the company is Qivalis. That company was established, incorporated in Netherlands, and they are currently seeking to obtain AMI license from the Dutch regulators. To be honest, because 10 banks like ING, Paribas, and so on are in this consortium, I think an AMI license, it's super easy for them to get. It's not about the banking license. And the main goal is to shift a little bit the dominance of USDC mostly in Europe, and to make a sovereign, let's call it sovereign stablecoin for the entire European Union, or at least Eurozone.
I think it's also connected to the latest recent political and geopolitical changes, because everyone understands that right now you cannot really rely on the foreign instruments. And it feels like USDC, USDT, dollar-backed stablecoins is a potentially threat for European countries and United Kingdom. So I think it shows the same trend with the Varo, which is heavily pushed as a local payment infrastructure in European Union. So I think we will hear a lot of times this new name Qivalis, which is a little bit scary for me to pronounce as Europeans, because it doesn't feel like a local name, but still, let's see how many times we will mention in our news for the next year.
Well, I'm not sure if the stablecoin will be named Qivalis or something like this. I remember this old interesting book, Qivalis to Dominate. Anyways, we are speaking about a classical branding for European region. We have a classical approach, European approach into doing things here with this company, with this stablecoin. But by sure, this is a tentative. Let's see how successful or not. It's a tentative to get more independence from different foreign, outside of European Union assets, which European Union doesn't control at all. Yeah, because unfortunately, current political environment proved that everything can shift like in one hour. even. And I don't know, it was a coincidence or it was a very, very wise move from all these 10 banks that they had this agreement much before all these turbulences has appeared on geopolitical and economical side of our world. And I'm sure that if this will be a success, or at least it will be a very stable product, people will start to get trust in this. By sure, a lot of Europeans will start to use this, except those who are still working in shady zone, because they'll still prefer to work with USDT, not even with USDC.
It shifts us a little bit to the another angle of the Saudi Arabia, which is becoming quite cashless nation. We see the latest news that the country reached almost 80% of the cashless transaction with the digital payments. It shows a lot of things that can happen to the country in 10 years. Because if you take a look and compare Kingdom Saudi Arabia 10 years ago and what we see right now, a lot of efforts was put into the digitalization and educating the people to use digital payments. So what do you think about that?
I think the trend will be that they'll become 95% cashless. Of course, the European Union is very ahead on this topic. Some of the countries in the European Union or European Economic Area are far away. Far away means like they are super cashless. But it's a good progress. It shows that businesses, card schemes, businesses like Visa, MasterCard, American Express have a future. I wish all the success to Saudi Arabia in this transformation, because it will increase the level of trust to the local currency. Not only, it will increase the level of trust to regulators from the business, because when you do digital transformation, you have to change regulations. And this is a signal that regulations work well, or that digitalization or the transformation works well.
Let's move to other side of the globe. And we have really interesting news from United States. Capital One strikes $5.15 billion deal for the Fintech Brex. In my understanding or in my experience, that story that shows an ability to deliver complex neobanking infrastructure or neobank solution in the United States, but there are always challenges in terms of the business models and accessing the customers. Initially, Brex was built as kind of the platform for facilitating the payouts to the gig workers or globally for the companies, and they were trying to evolve the model. Maybe you can compare to Wise or solutions like that. Then they focus more on the B2C and B2B customers. As I understand, that has been acquired by Capital One for extending the commercial customer usage in the United States. And it's once again shows that there is a lot of appetite from tier one banks, tier one, tier two banks to acquire the fintechs, to expand their customer base. And on the other hand, it shows that there are still a lot of challenges for newcomers to the market to find the proper business model and have a proper customer base that is possible to monetize.
This is absolutely a classical example where needs met with possibilities. So from one side, there was a company with possibilities, capacities to provide digital products in fintech and in banking, but with a need of liquidity, need of investments, need of a big cash portfolio behind. And from the other side was a bank, a tier one bank with a lot of cash, but they were searching, and they're still working on making digital transformation. Of course, it's not a classical term, digital transformation, but make a shift, move to the new market, approach the new customers or old customers, but with a new management, with a younger generation management, and to approach them, to work with them, to provide them services. So this synergy happened. Very often these things you can see on the market when something very smart, very innovative, made with old money, with big money, and this synergy can create something absolutely unique. Capital One told that Brex will continue to operate under its brand. So basically, Brex will remain as a separate entity. Brex will be a part of Capital One Group, of course, but it will remain a separate entity with its own management. Of course, it's expected that there will be some shifts in the management, but the difference is that Capital One will be the internal investor. So what Brex will achieve here is maybe a little bit a fresh view on the P&L and operational things inside, and will achieve big amount of cash that will help them to promote themselves, to hire maybe some new people for developing some new products or niches. By sure, it will be a win-win for both of the companies.
Thank you for listening to us today. Sign up for our social media. Please comment, please like this episode and share with your friends. And we're looking forward to see you next week.